Hello, Assalamu alaikum. I'm Asha Azin and I am here to present our presentation topic How does Pakistan's stock market function compared to regional peers? This presentation topic is covered by our four members Asha Azin, Mariam Javed, Hafsa Fatma and Mariam Batul. I will explain introduction to Pakistan. Now we will start our topic from introduction to Pakistan Stock Exchange. Pakistan Stock Exchange is Pakistan's premier stock exchange providing a platform for economic growth and investment opportunities. Founded in 1947, it is headquartered in Karachi and the financial capacity of Pakistan. Pakistan Stock Exchange plays an important role in that stock exchange provides a platform for investors to buy and sell shares of publicly listed companies. Through this exchange, companies can raise capital by using shares, while investors have the opportunity to earn profits through compensation and capital gains. Pakistan Stock Exchange is critical to the growth and stability of Pakistan economy, promoting transparency and liquidity in publication. Now we will move toward history of Pakistan Stock Exchange. I will tell you the history of the Pakistan Stock Exchange and their era. The history of the Pakistan Stock Exchange is a testament to the evolution of Pakistan's financial market and its integration into the global economy. Number one, we have era pre-independence era 1947. The foundation of the modern stock exchange in Pakistan can be traced back to the before the country's independence in 1947. The Karachi Stock Exchange was established in 1947 as a result of the collective efforts of Karachi's leading brokers. Now, second era, early growth and development 1947 to 1970. Its early years, the Karachi Stock Exchange operated as a small but vibrant exchange facilitating trading primarily in cotton, shares and other commodities. Now third one, expansion and regional development 1970 to 1989. The 1970s witnessed the establishment of the Lahore Stock Exchange in 1970 and Islamabad Stock Exchange in 1989. The regional exchanges provide localized platforms for trading securities and contributed to the decentralization of Pakistan's capital market. Now, fourth one, technology and modernization 1990s to 2000. The introduction of computerized trading system 1990s revolutionization stock trading in Pakistan, making transactions faster, more efficient and transparent. During the period, the Karachi Stock Exchange, Lahore Stock Exchange, and Islamabad Stock Exchange experienced significant growth in market capitalization, trading volumes, and the number of listed companies. Merge and formation of Pakistan Stock Exchange 2016. In a landmark move aimed at consolidating Pakistan's capital market and enhancing their competitiveness, the Karachi Stock Exchange, Islamabad Stock Exchange, and Lahore Stock Exchange were merged to form the Pakistan Stock Exchange on January 11, 2016. Now we will move what are the market structure of Pakistan Stock Exchange. The Pakistan stock market operates within a regulated framework overseen by Securities and Exchange Commission of Pakistan. It follows a modern electronic trading system allowing for efficient and transparent transaction. The market structure includes regulation. The Pakistan Stock Exchange operates under the regulatory framework provided by the Securities and Exchange Commission of Pakistan. The Stock Security and Exchange Commission of Pakistan monitors market operation and ensures compliance with regulations to ensure market integrity and investor protection. Now we have Stock Exchange. Pakistan Stock Exchange is that central plane where buyers and sellers come together to trade stocks and other financial instruments. Brokers act as intermediaries like middlemen between investors and stock exchange. They execute buy and sell on behalf of clients and provide various advisory services. Now, market liquidity. Liquidity. What is liquidity? Liquidity refers to the ease with which investors can buy or sell securities without having a major impact on their prices. The objective of the Pakistan Stock Exchange is to maintain market liquidity, which it strives for through market making arrangements, provision of liquidity by brokers, and regulatory measures when necessary. Market liquidity plays an important role as it provides ease of entry and exit to the market for investors, which is an important factor in the future optimal movement of the market. Now, clearing and settlement system. This system is transmitted accurately in real time, enabling continuous transaction between you, the buyer, and the seller. Now, we will talk about participants of the Pakistan Stock Exchange. Now in participants we have the retail investors. What are the retail investors? Individual investors who buy and sell stock for their personal investment purpose. Now second one, institutional investors. Investor participates in the stock market by buying and selling shares. These include individual buyers, institutional investors such as mutual funds, banks, insurance companies, and foreign investors. Now third one is market makers. Market makers provide liquidity to the market by looking at the buy and sell prices for specific securities. They ensure trading by facilitating transactions even in case of limited preferences. Listed companies. Companies that have issued shares to the public are listed on the stock exchange. Regulators. Regulatory bodies like Security and Exchange Commission of Pakistan monitors the market operation, ensure compliance of certain rules, and protect the interest of investors. Hope you will enjoy. Thank you.
Assalamu alaikum. My name is Mariam Javed, and now we will discuss my topic Pakistan stock market function compared to regional peers. First function, market structure and organization. Market structure refer to the framework and organization of stock market, including the type of participation, trading mechanism, and regulatory framework. It determines how the market operates and how securities are traded. In the Pakistan Stock Exchange, the market structure is characterized by the centralized exchange-based trading system. The Pakistan Stock Exchange has a single trading floor where brokers and traders physically gather to buy and sell securities. Similarly, the Bangladesh Stock Exchange in India also follows a centralized exchange-based trading system. The Bangladesh Stock Exchange has implemented advanced trading mechanisms and technologies to enhance market efficiency and liquidity. Second function, trading mechanism. The Pakistan Stock Exchange follows a trading mechanism known as continuous trading method. This means that trading takes place throughout the trading hours, allowing investor to buy and sell security at any time during the trading session. The Pakistan Stock Exchange uses an electronic trading system called the Pakistan Automated Trading System to facilitate this process. Now let's compare this with regional market like the Bombay Stock Exchange in India and the Dhaka Stock Exchange in Bangladesh. Both also use continuous trading mechanism similarly to the Pakistan Stock Exchange. This means that investor can trade securities throughout the trading days. Third function, market liquidity and depth. If we talk about market liquidity and depth, market depth refer to the availability to buy and sell orders at different market level in the market. It indicates the number of buyers and sellers and the volume of securities being traded. Liquidity, on the other hand, refers to how easily security can be bought and sold without causing significant price fluctuations. In comparison to regional pairs like the Bombay Stock Exchange in India and Dhaka Stock Exchange in Bangladesh, the Pakistan Stock Exchange may have relatively lower market depth and liquidity. The Bangladesh Stock Exchange, being one of the largest exchanges in the region, generally has higher market depth and liquidity compared to Pakistan Stock Exchange. Market performance and investor participation. Market performance refers to how well the stock market is doing in terms of price movement and overall return. Investor participation, on the other hand, refers to the level of involvement and activity of investor in the market. When comparing the Pakistan Stock Exchange to regional market like the Bombay Stock Exchange and Dhaka Stock Exchange, it is important to consider various factors that influence market performance and investor participation. The Pakistan Stock Exchange has shown positive market performance in recent years, with the benchmark Karachi Stock Exchange 100 index experiences growth. Next topic, market performance analysis. Comparison between Karachi Stock Exchange and Bangladesh Stock Exchange. The Karachi Stock Exchange, now known as Pakistan Stock Exchange, is the main stock exchange in Pakistan. It plays a crucial role in the country's economy. The performance of the Karachi Stock Exchange is influenced by various factors such as economic condition, political stability, and investor sentiments. When comparing the Karachi Stock Exchange and Bangladesh Stock Exchange, it's important to consider the overall market performance, including key indices and indicators. In terms of market capitalization, the Bangladesh Stock Exchange is one of the largest stock exchanges in the world. It has a wide range of listed companies and attracts significant domestic and international investor participation. Both the Pakistan Stock Exchange and the Stock Exchange in Sri Lanka have their own unique characteristics. The Pakistan Stock Exchange is one of the largest stock exchanges in the region, while the Colombo Stock Exchange is the primary stock exchange in Sri Lanka. In terms of performance, the Pakistan Stock Exchange has faced challenges such as political stability, security concern, but efforts have been made to enhance market infrastructure and attract foreign investments. The Colombo Stock Exchange has also experienced its share of ups and downs influenced by factors such as economic condition, political stability. Next topic, comparative analysis, Pakistan stock market with regional peers. First, market capitalization. The Pakistan Stock Exchange is one of the largest stock exchanges in the region and has a significant market capitalization. However, it's important to note that market capitalization can influence based on various factors such as economic condition, political stability, and investor sentiments. When compared the Pakistan Stock Exchange to other regional markets such as Bombay Stock Exchange in India and Colombo Stock Exchange in Sri Lanka, it is essential to consider the size and dynamic of each market. For example, the Bangladesh Stock Exchange is one of the largest stock exchanges globally and has a substantial market capitalization. Second, trading volume and liquidity. When it's come to trading volume and liquidity, the Pakistan Stock Exchange has seen significant improvement in recent years. It has a relatively active trading environment with a diverse range of listed companies. However, it's important to note that trading volume and liquidity can vary over time based on market condition and investor sentiments. Comparing the Pakistan Stock Exchange to other regional markets such as the Bombay Stock Exchange in India and the Colombo Stock Exchange in Sri Lanka. The generally has higher trading volume and liquidity due to its larger market size and extensive investor participation. The Colombo Stock Exchange, being a smaller market, may have comparatively lower trading volume and liquidity. Third, regulatory environment. The regulatory environment play a crucial role in shaping the overall investment landscape and investor confidence in a market. The Pakistan Stock Exchange operates under the regulatory framework of the Securities and Exchange Commission of Pakistan, which is responsible for overseeing and regulating the securities industries in Pakistan. When comparing the regulatory environment of the Pakistan Stock Exchange to other regional markets such as the Bombay Stock Exchange and Colombo Stock Exchange, it's important to note that each market has its own regulatory body and framework. Last, foreign investor participation. Foreign investor participation is an important factor in determining the attractiveness of a market and the potential for international capital inflows. Let's take a look at how a foreign investor participation in the Pakistan stock market compared to other regional markets. In recent years, the Pakistan Stock Exchange has made effort to attract foreign investors by implementing various measures and reforms. These includes the introduction of the centralized foreign investor portfolio investment system. While the Pakistan Stock Exchange has seen an increasing in foreign investor participation, it still has room for further growth. Compared to some other regional markets like the Bombay Stock Exchange or the Colombo Stock Exchange, the Pakistan Stock Exchange may have relatively lower foreign investor participation. Thank you. Now from here, my next group member still continue.
Strength of Pakistan Stock Exchange. Number one, regulatory framework. The regulatory framework established by the Securities and Exchange Commission of Pakistan ensure transparency, fairness, and investor protection within the market. Integration of exchange. The integration of the Karachi, Lahore, and Islamabad Stock Exchange into the Pakistan Stock Exchange has created a more centralized and uninterrupted market structure. Technological advancement. The PSX has made significant strides in adopting modern technology infrastructure include can lead to improved liquidity, efficiency, and market depth. Diverse investment opportunity. The PSX offer a range of investment opportunity include stock, bond, and derivatives. Strategic location. Pakistan geographical location at the crossroad of South Asia, Central Asia, and Middle East provide strategic advantage for investors looking to access emerging market in the region. Weakness of Pakistan Stock Exchange. Liquidity concerns. Compared to regional pairs like the Bombay Stock Exchange, the PSX may face liquidity challenges due to lower trading volume and limited investors' participation. Political instability in Pakistan can have a significant impact on investors' confidence and market sentiment. Limited market access, restriction on foreign investment, capital control, and cumbersome liquid regulatory procedure may limit foreign investors' participation in the PSX. Market fragmentation. Despite the integration of multiple stock exchanges into the PSX, has there may still be fragmented within the market, leading to inefficiencies and disparities in pricing across different trading segments. Corporate governance issue. Weak corporate governance participation among listed companies include lack of transparency, insider trading, and financial irregularities can undermine investors' confidence and erode market integrity. Pakistan Stock Exchange. The Pakistan Stock Exchange is the main stock exchange in Pakistan. It listed a variety of companies such as banking, energy, telecommunication, and textile. Bombay Stock Exchange. India's primary stock exchange. It listed various companies such as IT, banking, pharmaceutical, and consumer goods. Dhaka Stock Exchange. The Dhaka Stock Exchange are the main stock exchange in Bangladesh. It listed various sectors include textile, banking, pharmaceutical, and telecommunication. Colombo Stock Exchange. The Colombo Stock Exchange is the primary stock exchange in Sri Lanka. It listed companies from sectors such as banking, manufacturing, tourism, and telecommunication. Pakistan regional pair. When comparing the market capitalization of the PSX with its regional pair, factors such as economic growth, political stability, regulatory environment, and investor sentiment play a crucial role. Causes. Economic impact. Higher market capitalization typically reflect a larger and more developed economy. Countries with large market capitalization often have more robust financial systems, deeper capital market, and greater access to capital for business. Investor sentiment. Investors often perceive stock exchange with higher market capitalization as more stable, liquid, and attractive for investments. Policy implication. Government and regulatory authorities may implement policies and initiatives aimed at increased market capitalization to spur economic growth and development. Competitiveness. Stock exchanges with higher market capitalization are often more competitive internationally and may exert greater influence on global financial markets, market depth and efficiency. Exchanges with higher market capitalization tend to have greater market depth, meaning a larger number of listed companies, higher trading volume, and narrow bid-ask spread. Investment opportunities. A stock exchange with higher market capitalization offer a wider range of investment opportunity across various sectors and industries.
Assalamu alaikum, this is Mariam Batul and I'm going to present the challenges facing Pakistan and regional stock markets. Number one is political instability and security concern. If we compare all the stock markets of the region, Pakistan is most prominently facing this problem due to its history of political unrest and security challenges. The second one is economic uncertainty. In India and Pakistan, the economies are facing different problems like inflation, fiscal deficit, currency devaluation, and the other problems. And these problems are directly affecting their stock market performances and investor confidence. The third one is lack of market depth and liquidity. Unfortunately, Pakistan is highly affected by this problem as compared to China, Bangladesh, and India's stock markets. Number four is government intervention and control. Yes, this issue is particularly evident in China's stock market and it is not as prevalent in other three countries like Pakistan, Bangladesh, and India. And the number five is high market volatility and speculation. Yes, again, China's stock market is known for its high volatility and susceptibility to speculate bubbles, which is not as prominent in other markets. Now, the common challenges faced by the stock markets of the regions are including regulatory issues, corporate governance concerns, infrastructure constraints, limited foreign investor participations, and the lack of financial literacy and investor education. Investor confidence and risk assessment. These are the most important concepts because they are affecting the performance and stability of the stock market. Yes, of course, when investors feel comfortable with any market, they will likely to invest more, and these investment will lead to increased stock prices and liquidity. So, following are some factors that are affecting investor confidence. Number one is political stability. Unfortunately, Pakistan political environment is facing the problem of instability. That's why the stock markets are failed to gain so much investor confidence as compared to China and Indian stock markets because they are somehow better in political stability than Pakistan. The second one is government intervention. In China, the government intervention is highly affecting the investor confidence, but the level of intervention in Pakistan, India, and Bangladesh stock market is relatively low. And the last one is regulatory stability. Regulatory stability and transparency also vary across the four markets, while regulatory stability is considered important in all markets. And common factors influencing investor confidence in Pakistan and regional markets are economic growth prospects, government policies, and corporate performance. Assessment. The following are some factors that are affecting risk assessment. For example, market size and liquidity. Yes, Pakistani stock market size can be a problem because it's relatively small as compared to regional market size, leading to differences in trading volumes, bid-ask spreads, and market efficiency. The second one is corporate governance standards. Corporate governance standards have been a problem. There have been instances of oversight, lack of transparencies, and conflicts of interest that erode investor trust and market efficiency. These issues are prevalent in both Pakistani and regional stock market. The third factor is infrastructure constraint. Infrastructure constraints such as limited trading platforms, a less technological advancement as compared to regional markets that hinders the market efficiency and accessibility. And the last one is foreign investor participation. This issue is something that is observed in Pakistani stock markets because there are various factors that are contributing to this issue, such as political instability, regulatory barriers, and concerns about market liquidity. These factors create insecurities for the investors and make them hesitant to invest in Pakistani stock market. Future prospects. The potential factors that could contribute to the growth and development of Pakistan's stock markets are as follows. Number one is infrastructure development. By investing in infrastructure such as upgrading the technological infrastructure, enhancing connectivity with other markets, strengthening market surveillance systems, by investing in these areas of infrastructure development, the Pakistan stock market can create a more efficient, transparent, and investor friendly market. The second one is foreign investor participation. This can significantly contribute to the development of the market. Increased foreign investment can bring new capital, enhance market liquidity, and promote international market integration. Financial inclusion. This can contribute to the development of the Pakistan stock market by expanding the investor base, enhancing market liquidity, promoting stability, and fostering economic empowerment for individuals and communities. And the last one is regional integration. This refers to the process of countries in a specific region coming together to enhance cooperation and integration across various areas, such as trade, investment, infrastructure, and policy coordination. It aims to promote economic growth, development, and stability within the region. So, the future of Pakistan's stock market look promising due to factors like economic growth, government reforms, demographic advantage, and infrastructure development. These factors can contribute to increased profitability, investor confidence, and business opportunities. Thank you for the attention. Allah Hafiz. Assalamu alaikum. This is Mariam Batul, and my topic is challenges facing Pakistan and regional stock markets. Number one, political instability and security concern. These issues are more pronounced in Pakistan due to its history of political unrest and security challenges. Number two, economic uncertainty. Pakistan and India face economic challenges such as inflation, fiscal deficit, currency devaluation, and external debt burden, impacting market sentiment and investor confidence. Number three, lack of market depth and liquidity. This issue is particularly evident in Pakistan's stock market as compared to its regional peers. Number four, government intervention and control. While government intervention is a challenge in China's stock market, it is not as prevalent in other three countries. Number five, high market volatility and speculation. China's stock market is known for its high volatility to speculate bubbles, which is not as prominent in the other markets. And the other common challenges faced by Pakistan and regional stock markets include regulatory issues, corporate governance concerns, infrastructure constraints, limited foreign investor participation, and the lack of financial literacy and investor education. Thank you everyone for your attention. Allah Hafiz.